So a couple of things to discuss in the briefing. I am mindful though that Donald Trump is doing a Q&A at the moment as part of his Asia tour. He's currently in South Korea. He's just delivered a statement which I thought was actually surprisingly diplomatic, very un-Trumpish in that sense. He certainly wasn't using terminology like the Rocket Man that we're so accustomed to in terms of his tweets. But he is in a Q&A at the moment, so tends to be where when he's speaking off the cuff, that if he is going to say something potentially inflammatory, then definitely it's still worth monitoring. So I'll keep an ear on that. Otherwise, just before I get the briefing underway, two things I'm just monitoring at the moment. Crude oil is just breaking yesterday's high here. So let me just transition now my charts and make crude a bit bigger so you can see what's going on here. We've just got above yesterday's high, and obviously this comes in the context of a really strong rally we had yesterday. We'll discuss a number of the reasons, but obviously the Saudi developments at the weekend with this crackdown that was seen from what's being coined now as Mohammed bin Salman as MBS. But you can see here the rally that we had yesterday was pretty phenomenal, about 3%, one of the bigger moves we've had in a long while, likely as well benefiting from a somewhat technical point of view, having got our heads firmly above that $55 price point, which was the year-to-date highs. And obviously this does put us back at levels not seen since going back to 2015. And now we're approaching on the way to $58. Again, I don't really see too much in the way to achieve 60. Seemingly only a matter of time, it would seem, at this point. But crude breaking a little higher. We'll have a chat about that in a second. But then also Eurodollar's just broken as well its respective low from yesterday afternoon. Had a test of that just a short while ago, and now it's broken down to move to 116 handle. So the dollar index is up about 1/3%, and so both the major pairs are in slight negative territory. Elsewhere, the Japanese yen as well has been seeing some upside movement. Keep in mind that in terms of the Asia Pacific session, it essentially took the lead from what we had on Wall Street, which was a positive close. The Nikkei at its highest level in 25 years, and so dollar yen's just coming up to this 114 handle here. I'm looking at in the futures, just adjusting my chart. It's gone through that level, and that was the high that was seen from yesterday afternoon, so taking a bit of a move through that. And then on the upside, really not too much technically until we get up to the R1 level, which would be that corresponding high from last Friday and also yesterday morning. So some general risk appetite coming on the fact that equities yesterday, again US near all-time highs. Likewise in Asia, got some stats here. The Nikkei average finishing its strongest level since 1992. Australia's ASX 200 index closing its highest in almost 10 years. So one of the questions obviously is, what's going on? Why are equities still pushing highs here? What seems to be just a continuation of this never-ending trend for global equity markets. And listening to one of the market commentators on Bloomberg this morning, I thought he had quite a good way of summarizing what he classified as the three pillars of what's underpinning this ongoing rise. And one of the things is earnings season. I know that it's mainly the smaller companies that are coming out now, and we're coming towards the end of the earnings season. We've had about 85% of the S&P or so report thus far. But interestingly, in terms of earnings, more companies, about 75%, are reporting actual EPS above estimates compared to the 5-year average. And actually looking at the numbers, if you think about the strength we've had in the tech earnings, the financial earnings, the energy earnings of late, it's been a very good earnings season. So underpinning that from a kind of micro level, fundamentals have been pretty solid. This, of course, comes in the backdrop of a still very accommodative monetary policy setting, albeit the Fed are raising rates. Rates are still relatively low. If you look at the ECB, they are tapering, but I was reading this morning, even though they're going to move down lower come 2018 from 60 to 30 billion, when you include the reinvestment proceeds in that, it's still phenomenally large quantitative easing that's going on. The Bank of England, everyone was panicking about this kind of interest rate hike, the first in over 10 years, but realistically we're at 0.5% and we're still, if going off Bank of England's communication, extremely dovish in terms of the rate trajectory thereafter. So again, earnings, a loose monetary policy environment that's still broadly in play, and then an improving global economic outlook that's very much being seen in most regions, definitely in the kind of strongholds and engine room of Europe, being Germany and to a lesser extent probably France, but then also economic improvements also ongoing in the US. So these are all reasons to support this narrative that equity should continue to, at this point, very hard to see a reason not to follow this trend, and no doubt 2600 in the S&P will be tested soon enough, and I'm sure 24,000 in the Dow at some point. The other side of this is they're your three pillars of support. The other side is your three risk events. Now, barring a black swan event, which of course you can't prepare for, if you think about Catalonia, well really that's died very quickly in terms of it being a major macro focus outside of domestic assets. Yes, Spanish yields and the IBEX still are relatively sensitive to that ongoing situation, but did it get to a point where all of a sudden every asset class is being continually looking for direction from the Catalonian situation? Well, no. And actually that's de-escalated considerably over the last week or so. If you look at North Korea, although yes, we are remaining very vigilant that Donald Trump is currently in South Korea on his Asia tour, and certainly the president has the knack of saying things against possibly what his advisors would be pushing him towards. But overall, North Korea, who are doing frequent missile and nuclear tests, that has also slowed quite considerably. So actually that risk has fallen to the wayside as well. One of the remaining things, of course, that we still need to look out for, and this is going to come pretty much in about a month's time, is the US debt ceiling. If you remember, it was a temporary stopgap that got put forward. This was in regards to rolling it in to the relief funding for the situation of the hurricanes in late September. And so the only real one risk to consider is the debt ceiling in mid-December at this point in terms of things that are on the schedule. And with that, again, people are fairly sanguine about that issue, because ultimately when we've seen even government shutdowns before, net effect of the last three government shutdowns back in, I think it was 2013 and then 95 and 96, equities actually rallied. So maybe that just goes some way from a broader perspective of explaining this continuation of the type of equity movements that we're seeing at the moment. Just had Alex here beside me shout euro, so you can see the euro's now taken that 116, has gone through that level. So let's just have a look here what targets we could possibly look at for the euro. This is a pretty big level that we broke earlier, as you can see, going off what would have been the 27th low, that double bottom, and that was also yesterday's low, that now we've broken that level. So seeing a bit of a decent push now on the downside. I guess I have to go back on a daily continuation now to look at next levels of relevance. And really there's not too much here technically until we start getting right down to the lower bound of the 115 handle. So I guess looking at this trade this morning, certainly if you have the luxury of some size, then certainly that target of S2, but then potential for a continuation of that move for the time being, all things being equal. Certainly though, the euro weakness has helped the DAX just recover some ground after the DAX initially saw some momentum on the break back through that opening price that we printed back on Friday morning. So the euro weakness just helping that reverse course slightly. Okay, few things then to talk about, and obviously this was the main headline from yesterday. I just wanted to recap a couple of the major points here. Oil holds near 2-year high as the prospect of more Saudi arrests. This obviously comes on the back of that 11 arrests or so of various royal family members, senior ranking officials within the Saudi setup, which is seen as a very aggressive move to consolidate power, essentially by MBS. And so what we're looking at here, crude's had a little run on yesterday's high, but has pulled back. But one of the most important things here is we do still remain elevated. So after, one of the things I wanted to look at here really is to put this in some context, because not only is this 2-year highs, the thing actually I find even more interesting is the speed of the rise that we've had since the beginning of September. So this was going back to the 5th of September, 4th of September, and this is the percentage-wise that we've risen over what really is a 2-month period or so. We've risen 22% in crude oil. You know, that's a pretty quick turnaround. I know people were criticizing, I think it was Citi, who were pushing for $60. People were saying that was ridiculous at the time, and they had that call in play for a couple of months. Certainly coming good now. We're only about $2.50 short of that. Darren, also thank you, pointing out that Brent is up over 39% since the June low. So, you know, incredible rallies that we've been seeing in oil. And a couple of things then to touch upon. Obviously, the Saudi situation is or has the potential to be potentially destabilizing for the region in respect to, I guess, domestically you can see what the power play is here in consolidating that from the leadership purpose internally in Saudi Arabia. However, this has increased expectations about potential military confrontation with the likes of Iran, for example, and certainly whether or not they can get together and make a cohesive agreement for an extension to the OPEC deal when people like Saudi and Iran are always at loggerheads. They've come together previously in the existing agreement, but can that now happen given what's been developing over the last couple of days will be interesting. The other thing that we saw yesterday, which definitely played a big part in this rally, almost a catalyst, the market was fairly unmoved actually during the European morning. It was when some Nigerian comments hit the tape that oil really started to get some upside. It was almost like it was just looking for the price to be ignited by a catalyst, and certainly that came courtesy of the Nigerians, who said that they would support calls for an OPEC cut and that they would limit their production, essentially. If you remember, Libya and Nigeria have been ramping up crude ever since the agreement began because they were exempt because of their civil situations. But if they're now willing to commit to a cut, then obviously that cut has more potency if they then have a limit of the amount of production that they can do. So that was definitely key, and this fits with the ongoing communication we've heard from the Saudi government as well as the Saudi oil minister, which is important now given what's developed at the weekend, in addition to Russia, that they're all open for potential extension of the cuts throughout the entirety of 2018. So as you know, whenever we have OPEC official decisions, the market tends to front run that quite heavily because of the fact that oil ministers speak so vocally on the issue. So a lot of this is pre-positioning for that event. Certainly, as I said, there are risks to that actually getting done, though, with the fractious relationship between Saudi and Iran. But there's that, Nigeria coming on board, the Saudi situation from the weekend. You've also got the rig counts we were discussing falling in the US, which materialized in the Baker Hughes number, now the lowest since May of this year. And then you've got the fighting between the Iraqi government and Kurdish forces, which was also more of an issue a couple of weeks ago, but certainly helps explain this really big push we've had in oil prices. Now, one of the main things this does mean from a broader macro perspective is that if oil starts getting to 60, 65, 70, let's say, dollars, then one of the main things that this will create, obviously, is inflation. And if you were looking at the Federal Reserve, remember we discussed yesterday, Dudley is now intonating that he's going to resign. Stanley Fischer is already resigning. Janet Yellen now will be stepping aside in February of 2018. This is your governor and your 2 vice chairs. All 3 generally of a similar viewpoint of monetary policy, which has been this slow, gradual approach. Now, going into 2018, all 3 are removed. Economic conditions are improving. If energy keeps going higher, then inflationary conditions pick up, and therefore there's a risk of the Fed trajectory getting more aggressive, i.e. more hawkish. And then if that happens, that's when it starts to become interesting whether or not this equity trend can continue more long term. So Powell's going to find himself in a pretty sticky spot, because conditions and composition of the FOMC potentially could change drastically. The composition, for sure, we know that, but if energy keeps going up, could provide him some headache, and he might need to speed up the process of rate hikes, which I am sure Trump now would push against, because he will want equity prices up at these all-time levels, because it helps, as we discussed yesterday, fit his political agenda. So just a few thoughts there this morning that I think are worth considering. Other things that we've had, let me just pull the Aussie dollar into shot. The Aussie has weakened overnight, and so this is really the overnight session here, coming back down to, let me just make this chart a little bit longer dated. So we're testing S1 at the moment. I guess beyond there you've got that afternoon low on the 6th at 65 or 76.50, excuse me, and then really a bigger level of near-term significance being around this 76.36, the low from the 31st, the 3rd and the 6th to keep an eye on. Now, why has the Aussie weakened is the main point that I want to discuss. And overnight, you've had the Reserve Bank of Australia's generally optimistic rate statement, so they kept rates on hold as expected, but the statement, as Bloomberg term it, laced with caveats. And one of the main sentences that they've picked out here is that one continuing source of uncertainty is the outlook for household consumption. This comes days after retail sales posted the weakest 3-month stretch in 7 years. He added, the governor, low, that inflation is likely to remain low for some time, reflecting slow growth in labour costs and increased competitive pressures, especially in retailing. So some dovish commentary here from the RBA, reiterating the warning of household debt as a key area of uncertainty, which has weighed on that currency. So despite the upward movements that we're seeing, and some of the movements in Aussie yesterday linked to the commodity movement as gold accelerated with oil in Monday's session, that's not occurring this morning, predominantly down to the fact that gold is pulling back from that move, and this dovish commentary from the RBA overnight. If you look at gold, you can see here we've had a bit of an extension on the breakthrough pivot just a short while ago actually. And so with equities, although we're starting to see a little bit of weight come in the futures market, again, sentiment generally has been more positive in the last 24 hours. And so maybe gold just coming off a little bit, just following on from that positive close on Wall Street and the Asia Pac performance. The DAX still up fairly sharply in the futures market, despite seeing some downward pressure more recently. Okay, other things to be aware of. This is just so you're aware of the timing of Trump and his tour. So obviously he's finished now with Japan, and obviously he did create. He said actually the same thing just now in the press conference to South Korea, where he's just been criticising that the US has come out worse with the existing relationships that have been in place with these Far East Asian countries for many years. So he's looking to talk trade is predominantly the main key area. But he's in Seoul and he's there for the next 2 days. He's there today and I think then part of tomorrow till he flies to Beijing. Now, one of the reasons why possibly he's not talked about terming it the Rocket Man is because he needs to go and sit at the same table as Xi Jinping tomorrow. And I'm sure provoking the situation is something he doesn't want to do when he's going to sit across the table with one of the world's most powerful men. So today is interesting in terms of potential headline risk on what Trump, let's say, might tweet that might inflame the situation. Whether or not he actually does that, given he knows full well he's got to go right into the heart of China tomorrow and Beijing, I think it's probably unlikely, but never put anything past the US president, I guess, is the one thing that we've learned. So China is going to be a real interesting thing towards the second half of the week. He then starts moving further south beyond there, but really it's this Japan, Korea and China part, the first leg of his tour, which is the most influential potentially for what he could say. Other things, just some other headlines that I saw this morning. You've had German industrial production slip in September after an August rise. So this is slightly counter to the factory orders we saw yesterday, which exceeded expectations. Steep falls reported in both capital goods and energy for some of the weakness that was seen. I don't think the market's really looking too much on this type of data. If you can see here, we get extremely large fluctuations in German IP. I'd be more probably concerned with the euro movement for the time being. BMW did have earnings this morning, although sound good on the top line. They actually did move a little lower in terms of early trade. Despite raising their full year forecast, they had lower Q3 profits. This was just some context to the ongoing situation. Again, I don't think this is really going to shock or surprise you. UK retailers, there's some data overnight from the British Retail Consortium. So this is not the type of information that would influence the pound to trade it immediately on the back of. This is more just providing you colour towards the situation then when the ONS retail sales will come out going forward, and then certainly as we go into this key retail period of Christmas. But essentially, UK retail sales fell the most in 7 months in the month of October, according to their measurement, indicating continued caution among consumers just weeks before the crucial Christmas shopping season. So again, this ongoing inflationary squeeze that's being put on the consumer is seeing spending growth decline on a year-on-year basis. Okay, in terms of the calendar for this morning, things are pretty quiet. Not a great deal coming out. Eurozone retail sales, that's not going to be a market mover. It never really is. Going into the US afternoon, likewise, pretty quiet. No real major data. We'll get the JOLTS job openings. Again, this used to be one of the favoured measures of the Fed, but I would say that the employment situation in the US is fairly robust. I don't think this is going to get too much of a look in terms of creating market direction this afternoon. More so, I guess, ongoing themes, equities at these still high valuations that we've been at, risk of Trump commentary, especially given his proximity to North Korea with his ally in the south at the moment. Then you get the API crude oil inventories. I'm not going to come until later on this evening. Speaker-wise, I'm going to come off the mic next couple of seconds, but you've got Draghi giving a welcoming address at an ECB forum on banking supervision, so he's due to kick off momentarily. Then some other speakers later. Lautenschlager may be one of interest. Fed's Yellen is actually speaking at an award ceremony, so not sure whether it'll get too much concrete on the economy or policy, but she'll be speaking much later in the evening at 7:30. Alright guys, that's it. So have a good day. Any questions, feel free to reach me in the chat room. Thank you.